Friday, 16th of June, 13 minutes to 11 a.m. in Australia. Here's my latest video blog. Haven't done a video in the last couple of days, only because over the weekend I had some other things to do, but also the cryptocurrency markets took a massive tumble, and we saw Bitcoin really slide right back towards the almost 2,000 US dollar mark, around about about 2.2, I think it got to almost. So it was a pullback that was again needed, because we've just had these massive periods of time where it's not necessarily 100% organic in regards to growth, and we've seen that with the altcoins in the last 3 or 4 months. We've seen the same with Bitcoin. So in the last short period of time, we've had 3 major corrections. With this one, I felt was pretty much one of the most significant. We had 30% losses, not necessarily losses, but changes in price across the board with altcoins and Bitcoin and Ethereum, and it was very healthy. And anyone that's investments will know that you want more organic growth. You don't want these massive bubbles, because people are buying at the top, whether that's FOMO or just lack of education, or there's not enough history to make a different decision in regards to when they invest. So there's some people who now have to wait for a recovery of the market to even get to a neutral position. However, if you're in investments, the best advice is probably to buy some more and stack and increase your position and bring that average down. But what I wanted to do, and also talking about this, and I've got two videos I'm going to do today. One is on the shadow gold price, and another one is going to be on the WebBot wealth report. I've got a copy of it, and I'm going to read through that and give you an interpretation. But just getting back onto the charts, something that I've been noticing is that due to the market of the cryptocurrencies being very new and young, having only a certain amount of exposure in regards to capital, I feel that there's some big money at play. And I'm finding, and I've been watching the charts quite closely and looking at how cryptocurrencies charts track each other. Now, if these are independent entities, which they are, you would probably find that most, in a normal circumstances, when they are at their normal or true market value, you will find that prices will fluctuate a little bit more organically, true to their current position as a business. At the moment, what we're finding is that Bitcoin has its own path, and the altcoins have a very similar path as well. And even if I went down this CoinGecko folio here, the worms look very, very similar. So there's some very significant dips. Now, that can be a number of reasons. One would be some massive big wealth pulling money out of the system, and because they've got such a major influence in the capitalization of these particular coins, they're making a massive dip on those charts, and they're happening at the same time with the different alts. So either there's an automated bot system, or there's some big money who have got their portfolios set up based on time. They can pull the plug when they need to, and it's always on a slide. It's never just one aggressive pullback. So they do it over a period of 4, 5, 6, 7, 8 hours, something like that, and you'll find that that's where these dips are coming. So big money is affecting the price, and there is a little bit of manipulation, I feel, that's happening, and it's vice versa. So when the money comes back in, and that's what's happening now, we're seeing all of these coins recover, and they're all starting to rise pretty much in a very similar format. And I think that what we can do here is learn to understand these crocodile teeth, as the WebBot report talks about, and I think it's going to be a little bit more aggressive, and they're going to be quite clear cut. They're going to be big swell, an all-time high, and then quite an aggressive pullback, and you're going to see a 4, 5, 6, 7, 10 day slide back, and we might even on the weekend we had this, it was probably a 2 or 3 day aggressive pullback. So you've got to interpret these movements, and it's speculating, and you could sell at an all-time high, and and hope that there's going to be a pullback, and most often than not there always is. However, you're at the risk of losing some position. But I just wanted to share that with you. I do believe there's some big money at play. They're very well organised. They've got bots in place. They're controlling the pricing to a degree based on their percentage share of the capitalisation of each individual coin, and we're seeing some very, very similar paths or pathways for these particular cryptos. So be mindful of when you invest is my biggest tip. What you should be doing is just keeping some money aside, a certain percentage, and making sure you buy on these really aggressive dips. I mean, I know that we can't all sit here and watch the screen all day, but if you are looking at stacking and investing and improving your position, I believe you've got to be somewhat ready and prepared, maybe have your Bitcoin ready at least, and then get that into the markets, and then you can buy on these dips. But interesting times regardless. What I wanted to do is move on to the shadow gold price. Now, I've never really, I'm right into gold and silver. I believe it's real money. I like having it as a hedge, as a long-term investment. It's real, it's physical, I can touch it. And I think there's a little bit of magic around gold and silver. But then there was this article on King World News. I've done a couple of videos on this, and I like the whole premise of this, and I think people are starting to understand that gold and silver is manipulated by a paper market, which means that they're not using a physical form of gold and silver. They're using a paper on a screen version of gold and silver, and they can basically do some manipulation of the markets, and they can drop these 5,000 ounce amounts, and I'm not 100% sure on these totals and the full contract agreements because I don't do it myself. However, they do move big amounts of money in and out of the gold without actually having to have any physical transaction between physical gold itself. So it makes moving, because gold and silver are very heavy and it's obviously takes up a lot of space, so having something on the screen is a lot easier to manipulate. But there's this theory about shadow gold. Now, this has got me thinking, and I'm just going to read this first paragraph out. This is by Ronald Peter. Here's another surname, Steferiel. Steferiel. Anyway, I'm going to leave that. But this is on June 14th for King World News. Despite having been officially outlawed as money decades ago, which I don't necessarily believe with, maybe outlawed, I think it's just been replaced. It's still legal tender in a lot of places. Outlawed as money decades ago, gold still remains the primary monetary reserve asset of all major central banks. Even though it's not pegged to the dollar, the major banks and certain major entities around the world are stacking gold and silver. So based on remarks in this report and the 10 preceding reports, it should be clear that we believe that gold must be regarded as a monetary asset. We first presented the so-called shadow gold price calculated by Paul Brodsky and Lee Quaintance in 2011. This way of looking at the gold price is by no means a mere intellectual game. Rather, it is in line with how the exchange rate between paper money and gold was determined according to the Bretton Woods Agreement, US monetary base divided by US gold reserves. So what they're basically saying is that gold is a monetary asset. I look at it as a monetary asset. I think there's a shadow gold price, and what that means is even though they've got a declared market price, and we know it's manipulated and it's hovering around about 12,500 US, 1,200 and a half US, and we've seen that go up and down over periods of time, and because of this manipulation, I think there's what was this? The Bretton Woods model for valuing US dollars was used between 1945 and 1973. Then they depegged gold from the US dollar. Rather than fixing gold US exchange rate, which is at 1/35th of an ounce, which assumed a static quantity of base money, it uses the actual quantity of base money versus actual gold holdings. A rising SGP implies USD purchasing power dilution in gold terms experienced under the post-Bretton Woods flexible exchange rate system. The widening gap between the SGP and the spot price from 1980 to 2008 reflects the steady creation of the USD base money as US and global output expanded. The sudden exponential rise beginning in 2009 reflects extraordinary base money creation through the Fed quantitative easing. So, going down, and there's a lot of stuff here, talking about how there's the major currency. So we've got the US dollar, euro, British pound sterling, Swiss franc, Japanese yen, and the Chinese yuan. And what they're talking about here is how much gold reserves in metric tons is in regards to the amount of US dollars, etc., and the euro and the different particular currencies around the world and how they relate to each other. Now, as I go down, you'd probably have to click on this whole article to go through it. I'm not going to run through these figures with you. But when you go down the chart, you can see there's some figures here, and they're talking about there's a massive gap between the actual amount of gold available and the actual amount of money that's in the system, or the currency, or the fiat currency that's been printed and is out in the, and they've broken it up into 4 different categories: an MO, an M1, an M2, and an M3. So these are 4 different classifications of possibilities of the shadow gold price, as far as I can interpret. So as we come down the chart, it's got some examples of the MO, the M1, M2 and M3, and they're quite significant in price changes. And what I wanted to do is just talk about this section here. Now, gold price headed to 20,000 US to $150,000 US per ounce. So this is a range between the MO, the M1, the M2 and the M3. Based on the calculations that they've determined. So consistently for the market price of gold, taking USD at 1,300 ounce, or $1,300 an ounce as the reference, to actually back up 100% of each monetary aggregate expressed in US dollars as a worldwide reserve fiat currency, it would have to rise around 9 times, which is 760% in terms of MO, which is the first base model, or monetary base, over 36 times, which is 3,569% in regards to the M1, 83 times, which is 8,137% in terms of M2, and a whopping 115 times, which is 11,400% in terms of the M3. So hypothetically, to back up 40% of such monetary supply in terms of different aggregates, the market price of gold should go up 240% in terms of the MO, 1,368% in terms of the M1, 3,194% in terms of the M2, and 4,500 in terms of the M3. In order to back up even just 20% of the monetary aggregates as denominated in US dollars, the market price of gold should go up at least 72%. For the MO, 634% in the M1, 1,547% in regards to the M2, and 2,200% in terms of the M3. And that's based on a 20% backup of the monetary aggregates. Now, it does actually go down and talks about, it should be around about 20,000 as a base average price and a sort of a conservative level. So what we're looking at is there's an actual price, and I think the powers to be, they're still stacking gold. China's stacking gold, Russia's stacking gold, the Federal Reserve is stacking gold, the central banks are stacking gold. Meanwhile, they'll distract you with all of the other crap that we see on TV, and you don't even see the gold price and silver price on the financial news anymore, especially in Australia, because they just don't want you looking at it. And that's because I think they're trying to get everyone else getting the digits on the screen, and they just want you to consume, buy, spend, and waste your money on sex, drugs, rock and roll. And in that way, what will happen is that they can maintain a massive gap between the elite and the middle class to the lower class. That's how it's worked for centuries. Now they've got a modernised version of that whole psyop. It's a massive mind game, and that's what they're doing. At the end of the day, they benefit from us utilising our monetary wealth to live our lives, and that's the big issue that we have. And I just wanted to share that with you. I do believe that gold and silver is going to skyrocket. It's been talked about for years and years and years and years, and I don't want to be another one of those guys that says, yes, it's going to happen this weekend, because I'm not going to be that. I'm not going to do that to you. But be aware that I think there's a true shadow price of gold and silver, and it is, at worst, if you're going to base it on 20%, should be 72% higher than what it is. But I think we could be looking at 2 times, 3 times, 4,000, at least 4,000% gains at some stage in the near future, and it wouldn't surprise me at all if that's what happens and we have this massive explosion, comes back down to a new market value of gold and silver. You know, it could be $5,000, could be 10,000, could be 20, like in this report. But I think that's going to happen at some stage. What they do with silver, I don't know. All I know is that silver's required in industry by a lot of companies. They don't want to see the silver price go up because they need it for their televisions and electrical goods and everything like that. There's a lot of other benefits of silver, so you know, solar panels and things like that. So what they want to maintain and probably suppress the price of silver for longer, and we may see that. And that's the big thing. It's the poor man's gold, and it might always be poor man's gold if they keep suppressing it. It's just a matter of whether or not there's enough outcry to find a new realised price for. Webbot report picked up something, or I read something somewhere about a major event in regards to gold-backed cryptocurrency, where they're going to be buying a huge amount of gold, which is going to trip off the circuit breakers. So keep your eye on that. Have a great day, and I'll be doing my Webbot report as my next video. Thanks, guys.